Hi, everyone. I'm Ivan Biuki, and welcome back to Wall Street Silver. Our guest today is E.B. Tucker, the author of Why Gold, Why Now, and director of Metallo Royalty and Streaming. E.B., it's great to see you, sir.
Thanks for having me, Ivan.
Yeah, it's an absolute pleasure. You have a wad of cash behind you. Can you tell us about that?
Well, that's $1,800.
Can I have
That's
some?
what it takes. Yeah, sure. There's plenty to go around. That's what it takes to buy an ounce of gold. This is a U.S. Eagle. $1,800 buys you an ounce of gold pretty much today.
Mhm.
And the reason why I have this is because this is what it used to take to buy an ounce of gold. It's $20. This is an actual gold certificate for 20 US dollars.
Wow.
And I think people just they've never really seen what it takes to buy the ounce of gold. The ounce of gold hasn't changed. In the 1920s, this was an ounce of gold. And today, this is an ounce of gold. It's just the amount of dollars it takes. And I hate to tell you this, but the stack is going to go higher. I mean, you just throw a couple hundred more on there and it keeps growing.
Oh, so is that another 200 to take it to 2,000?
That's another 200.
Yeah.
That's another 200. And I think people need to see right now, they understand conceptually. Everybody goes to the grocery store, they buy meat. I buy grass-fed meat. It's about $30 to $35 a pound. I think grass-fed cows used to eat grass. I don't know if anyone knows this, but they used to not eat genetically modified soy and corn and live in a cage. They used to eat grass. That's what they did. And so grass-fed beef makes a lot of sense to me. So I buy that. It's about $35 a pound. Another thing that's nice about grass-fed beef is it's the real cost of beef. It's kind of like if you buy an organic apple, it's about $3.50 per pound of organic apples. But if you go to Walmart and you buy one of those perfect little apples, they call them red delicious, but they're not delicious and they're not really red. And so if you buy one of those, it's 99 cents, but it's not a real apple. It doesn't taste like an apple. Your body doesn't recognize it. So my point is, if you buy organic foods, you're very sensitive to prices because when the price of growing the apple goes up, the price of the apple goes up. Whereas with genetically modified foods, you can change that. And I think everybody out here knows that everything's going up in price. You go to a coffee shop, there's a sign that says, due to rising prices of coffee imports, we've had to raise our prices. Thank you for being a loyal customer. We also can't find any help. We spend a lot of money on plexiglass. You can't hear what the barista tells you anymore because this is double face mask. So thank you for your cooperation. And also your sales tax went up and you're just bamboozled as a customer, right? But slow down for a minute and think, wait a second, it's not that complicated. The price of everything is rising. The price of this stack is rising. However, the ounce of gold, I mean, you could say the ounce of silver, whatever, it's the same principle, is not changing. An ounce is an ounce is an ounce. It's never going to change. It's just the amount of paper or digital. We'll be on FedCoin soon. The amount of digital, but they won't let you buy the gold because Ivan has a bad social credit score because he's always talking badly about the central planners. And so we're going to punish him a little bit, and anyway, so that's what you have ahead of you. So where do you want your money? That's the question.
Well, you just raised the price of food, real food is going up. Where most of our food's coming from, of course, is, massive corporate industrial sized farming and input costs from fertilizer just going through the roof. This is actually out of date. It's even higher now, this chart that I've put on the screen, but natural gas, ammonia, fertilizer, everything's just going through the roof. Now, at the end of the day, do you consider this monetary policy or do you consider this a function of just supply disruptions and it's all transitory and it's all going back to normal like Powell and Yellen tell us?
So a big problem, and I told this to my friend Doug Casey last night, I said, the problem with you, Doug, right now is that you keep using capitalist theories to analyze a command economy. So and what we mean by that is that you keep using things when you're in a capitalist system, you have price discovery. So the fertilizer producer meets the fertilizer buyer in the market. It's very natural. And there's another producer comes in and says, hey, I can get you the urea cheaper than you guys are producing it, whatever. And so, but that's not happening anymore. So now you're in a command economy where you have a carbon score for that producer. And then you say, well, there's a brown trout in the creek near the fertilizer facility. So we'll have to do an extensive investigation. And, some gender confused person with a clipboard goes out there and spends a month, while everything is stopped. Okay. So this is called a command economy.
Mm-hmm.
So this is where you don't have price discovery anymore. And I was telling Doug, I was saying, you can't use the sniffing that you did in a capitalist system to figure out what's going on in the command economy. So monetary policy is part of it. The command economy is a bigger part of it. You're seeing policies roll out right now. My partners with Metallo Royalty, which we can talk about later, we've also got a carbon credit royalty company that we're working on that'll come public next year. And it's incredibly interesting. You just had all the elites of the world land in Edinburgh, in Scotland, Glasgow, for the COP26. One of our guys went there. Okay, this is great. There were so many private planes that they had to drop people off and fly the plane to another airport and land the plane because the FBO was full. No. So what are they doing at this conference? What they're doing is they're deciding how they're going to handle, carbon is going to be an existence tax. Mm-hmm. So everything, when you buy something, you buy the attractive jacket you have on, they'll say, well, that's got a carbon score of 9 because it was, but now this jacket that EB has on, now that was made with post-consumer recycled Pepsi bottles. 2% of it was, okay, like the buttons were. So he gets a lower score, wow. So this is a cheaper jacket because it doesn't have a penalized, a metric, that with the carbon. Okay. So that's what we have ahead of us. So part of it, Jim, is the monetary, but part of it is also a command economy. In a command economy, it functions differently than in a capitalist economy.
And so a leather jacket made from cow farts.
Ooh, that is
off the charts, right?
Well, you're going to pay through the nose. And when you use your
Fed coin, tax of 120
when you use your Fed coin, we'll have a little chat with you that says we're going to restrict your leisure activities for the next few months because you were concerned. This is non-virtuous behavior with this leather jacket.
Yeah, so that'll be like, hold on, I actually had no hot showers for a month or something like that. That's what anyways, that was a video the World Economic Forum just put out the other day about no one should take hot showers anymore.
So let's talk about that. So remember Jimmy Carter sitting in the White House with his sweater on, encouraging people to not run the heat so much in the 70s, due to the energy crisis. That's kind of what that reminds me of. But I want to bring your attention to something bigger. The World Economic Forum was kind of the place to go in Davos. I've been to Davos skiing. It's not a lot there. I mean, it's not that cool. I was kind of disappointed arriving at the train station. You look around and you think, I thought it'd be nicer. But there are some communities around Davos that were far nicer. But anyway, that was the think tank for the last part of the system. But I think the World Economic Forum is no longer relevant. I noticed recently the Bloomberg New Economy Forum in Singapore was where everybody was, right? I mean, is Mike Bloomberg talking about we need to make sure that no taxpayers have guns. And then there was Gates talking about we've come a long way, but we have to inoculate everyone more to make okay. So what I noticed was that the World Economic Forum's presence is shifting. And now it's funny how for a new era you have a new platform. Because remember, the World Economic Forum also people started hating it a little bit. They started saying, Klaus Schwab was saying, well, you're going to rent everything and you'll love it because you'll just be a kind of a slave and you're not going to own anything. So you're going to be so happy with that. Remember this? And people, he wrote a book about it. So, and then people were saying, I don't know if I like that idea very much. And then they've now shifted gears. And so the Singapore really is the place where the power is. I mean, the number of family offices, all the Google guys are there. I mean, everybody is flocked to the city state of Singapore, which ironically is a very capitalist, representative republic type place. I mean, you could say that, Lee was a bit of a dictator, but it's not really true. I mean, there was the city-state concept was alive and well, and I think people felt like they had the ability to be represented based on the amount of weight that they brought to the city. So I don't know, Singapore, went from a swamp to the new, pivot point of the world in less than 100 years. I mean, that's pretty interesting, but anyway, but my point is the World Economic Forum, it's funny to watch that become a little bit less relevant these days.
Well, let's get back to, I've heard your description of reverse repos, and I'm just going to say what my theory on this is. The Fed has to create an outlet, right? They have to give money a place to go in order to avoid treasury bills, short-term rates going negative. They desperately want to avoid negative rates. Is the purpose of this reverse repo facility and why it went to 1.6 trillion because of that? I mean, otherwise we'd be at negative rates. Or explain reverse repos to our audience. Most people don't even understand what it is.
Think about this: the Fed has been providing emergency liquidity now for something on the order of, I want to say 20 years, because really it was happening after 9/11, but it got crazy after 2008, right? So the Feds, we've been in an emergency situation. I mean, do we feel like we're in an emergency? No, it's kind of like, is it really an emergency if it goes on for 20 years? I'm not sure it is. Okay, so as this goes on, like right now, for example, the Fed is talking taper. Well, they're producing, they're buying 120 billion a month of different securities. They're buying mortgages, they're buying treasuries, all these different things. And so they buy these things and they have an asset on their books. And what they do with this repo, everybody thinks repo means the bank is coming to take your car away or something. I mean, it sounds like you're losing something, but it's not. What happens with this repo is the Federal Reserve says, okay, give us these dollars you have for 24 hours, and we'll give you one of these bonds we have for 24 hours. So that this is on your books and the dollar's not on your books, and you hold this overnight, and we'll pay you some infinitesimally small, interest rate, which is better than negative, okay, to hold this. And so this repo, this chart that you showed, what it is that money is sloshing over here temporarily, and then it's sloshing back over here. So it has nothing to do with taking away an asset, repossessing. And the repo agreement means that 24 hours from now, you have the right to repossess it. I mean, that's where the name comes from. And this has been around for quite some time, because it was kind of a normal thing to do at one point, where you would say, well, at the end of the quarter, September 29th, I've got surplus cash for some reason, and I would rather have commercial paper. And so I'll have a repo agreement with a bank or with someone, and I'll flip this cash for commercial paper. And then October 1st, when the quarter's over, the reporting is done, I'll flip back. So it's kind of like a normal thing you would do with money. But that chart is not normal. And what that shows is there's a gigantic amount of money that has now found its way into this facility. It's been quarantined. Now, one quick thing. You guys said that the Fed desperately doesn't want treasuries to go negative. I'm not really sure that that's true. I think what they really don't want is they don't want you to realize you're being managed with financial repression. Now, financial repression means that you see 1% return, but the actual return is negative 5%, and you don't know about it. Okay, so what's going on right now is real rates are actually deeply negative, and what the Fed doesn't want is for you to figure that out. So it's very interesting. I just bought a $10,000 U.S. savings bond. And all my friends were blown away that I did this. There's a Series E savings bond on the Treasury Direct website. $10,000 a year is the limit, and I got 7 1/8 is my percentage rate. 7 1/8, because it's a fixed rate plus an inflation adjustment. And they limit it to 10 grand a year. It's simple interest. There's a lockup period, blah, blah, blah. But it's funny because there are little signposts all over the place like we were talking about the cost of the groceries and all that stuff.
Mhm.
So you see 1% on the treasury, or you see 0.5% or whatever. You say, well, could be worse, but the actual real return is negative. And so this is good for the Fed, because this, they hope, will soak up some of the printing.
Mhm.
Do you see how this works? So because if you can run financial repression long enough, you will negate the effects of the printing from before. Now, once people figure it out, you have a huge problem, and you have to do yield curve control. And probably at that point, you have to introduce some sort of radical transition into a new era. And I think they might actually pull this off for quite some time, because they're never going to taper. They're never going to raise rates. It's never going to happen. And if you notice, remember, the Fed's going to taper. Fed's going to taper. Are they going to taper in October or November or December? Okay, wait. They plan to taper. Oh, wow. Okay, they plan to taper. The dot plot says they'll taper here, and then they'll raise rates here. And then you see articles, is Jerome Powell a master of the world? And is he so virtuous, so accepting, so social justice oriented? Is he a man of our time, a man of all ages? I mean, you see these things. And then yesterday in Congress, transitory is no longer relevant. Inflation actually is here. Maybe we'll speed up the taper. Are we going to speed up the taper? Or are we going to slow down the taper? I mean, you guys, if you read all this stuff and you think that this is the way you get your information, you are screwed. Because all you have to do is go back and keep a journal of everything that is said. Okay. So one thing that I do in my personal life is, when I have something that I'm very irritated about, I write down, so that I can kind of make a list and say, okay, I handle this later. I'm not going to worry about this at this moment. And it's amazing, because when I come back and read the list later, I think, this is nuts, man. I can't believe I was upset about that. So my point is that writing down things is really good. How does that relate to the taper? Okay, so when you see these headlines, these guys are never going to taper. The emergency is going to go on forever until the system collapses into a new system. And you're making it work, because you're buying into the, okay, well, they're going to remove the low interest rate accommodations soon. I mean, never.
Here's the latest headline. EB.
There we go.
Hey,
look at that.
We're speeding it up. We're going to discuss. We're going to discuss.
We're going to think about it.
At the December
We're going to think about it. When you're addicted to, you have like a cocaine addiction, and you say, I'm definitely going to think about stopping this next week. Like, so let's kind of shift to, what do you do about it? Okay. So in my book, I'll save you the trouble, because nobody likes to read anymore. It's on Audible as well, but nobody even has time to listen. But in my book, I explain all this, and I say, with my money, okay, I have invested heavily in the royalty business, like to the point where I couldn't find an acceptable royalty company. So I started one. This has been 5 years ago. We started at 80 cents a share. We're at about 750 now. It's been a tough year, because nobody's interested in the business. But the stock was at 13 a year ago. It's amazing. The business has been heavily out of favor, because, as you know, AMC movie theaters has been the hottest stock of the year. And GameStop used video game store has been the second hottest stock. So royalty company has not been very popular, because with a royalty company, similar to the government, you like inflation. Because, see, the government likes inflation, right? So if taxes are 20% for you and you make 10% more money, the government just got a raise. Yeah. Okay. So 20% is 20% of your new income too. I mean, in fact, they're going to raise the taxes, but I can't raise the royalty. I mean, if I get 1%, I get 1%. I don't have enough nuclear powered subs to command people to pay me more. I only get the 1%. So I don't mind the inflation, because the gold mines expenses are going up, copper's going up, oil's going up, labor's going up. I don't know if you're seeing this, but Fortuna Silver had all these problems with one of their mines in Mexico, gigantic problems, and then Peru has had a change in government. They've got like this this guy
The
with
steel.
all these children. Yeah, he wears, like a farmer outfit, and he's now going to take away all the permits for the mines. So anyway, you have a shift going on. Okay, so it's becoming more expensive to produce all these materials. However, I spent the last 5 years buying 1% of all the production forever and ever and ever and ever and ever. And it covers the entire land package around the mine. So if you find more gold over here, it's covered. And I explained this in the book that what you get is you get this gigantic lever to future asset prices. Like as the asset price, as the price of anything, gold price rises. Now people get crazy about this. They say, how high is the gold price going to go? I said, it doesn't matter. Well, what do you mean it doesn't matter? I go, gold is not an investment. It's not. I mean, it's wealth storage.
Yeah.
Okay, so an ounce of gold used to get you a nice suit. An ounce of gold today almost gets you a nice suit. I mean, it's kind of not quite kept up. But my point is that if you put the gold in an envelope and you put the cash in an envelope 100 years ago, the gold kept enough value for you to live. Whereas the $20, I mean, guys, I can get a cup of good coffee, like a croissant or something, and the barista wants a tip. By the way, they want like a $3 tip, and the $20 is gone.
Yeah,
I mean, that's 20 minutes of consumption. It's gone. So, whereas the 1800, like the ounce of gold that I swapped, I mean, I've got coffee for a year, right? So my point is that the royalty business appealed to me in this time because it's a business where I sleep well at night knowing that my 1% comes over 10, 20, 30 years. I mean, you can't even buy a 30-year inflation protected anything. Like, forget about it. I mean, you could buy tips, but are you really getting all of the protection? And it's very complicated.
We actually had Dave Garofalo on a few weeks ago, and he was explaining the royalty business model to our audience also in those same terms. You get the upside of prices increasing, but you don't really have to worry about the cost. Like if gold or silver, go to the moon, it really depends on why it goes to the moon. Is it because of monetary debasement, or is it because of a shortage? Now, if it's because of a shortage, then the margins go up for the miners, and that's wonderful. But if it's monetary debasement and all their costs are going up also, well, then their margins are getting screwed also. So the miners are not the place to be. The royalty companies are
bullseye. Bullseye. Because what you're talking about in the business is risk to the margin. So the royalty company has margin protection. And the reason why I didn't want to say that is because it's a bit of jargon. It's kind of like the investment bankers talk about that, but I think for average people, it's hard for them to understand it. But the way you explain it is exactly correct. Think about Fortuna Silver. The stock price has really been hurt because they're dealing with these exogenous risks right now to various parts of their operation. They have to dig the silver out of the ground. They have to get to the mine. There's people protesting. Yeah, it's crazy. And they have government risk. They have permit risk. They have environmental risk. They have labor risk. They have raw ingredient risk, like with trucks and oil and all. I mean, oil is about 25% of the cost of mining. Energy is. And now what are they trying to say? If you read the annual reports to the mining companies, they're like, we're going to be all electric vehicles at some point. What? I mean, who's going to pay for it? So imagine what that's going to do to cost. So you're exactly correct that
ESG,
the old
ESG, we got to look green.
It's not going to go away. Believe me. All the companies have an ESG policy. The World Gold Council has an ESG policy. Everyone has an ESG policy. And if you can't meet it, you have to buy offset credit. That's why we're starting an offset credit royalty company. It's very interesting. This is a huge trend. It's a huge trend. It's a mega trend. In fact, every day that goes by, I'm stunned at how big this trend is. Meanwhile, I've got Metallo over here with hundreds of thousands of ounces of gold in the ground that somebody else is going to dig up over the next 30 years plus. Nobody wants that. So, I mean, it's bizarre, right? I mean, in my opinion, you have that. You have Nova Royalty, NOVR, and NOVRF. That's copper and nickel. Then you have the carbon offset royalty company. You have all three, because there is going to come a time where electric vehicles come under extreme pressure, the production of them, because they can't meet the raw material needs to make the vehicles. I mean, you're talking about 2 or 3% of cars right now are electric. I mean, you try going to 50% of cars. I mean, there's 100 pounds of copper in those things. Like, you try going to 50% without new supply. Then read the Rio Tinto copper, Rio Tinto, the big producer, read their annuals about what's happening at the copper projects. They're losing permits and they're being protested by their own shareholders.
Wow.
It's unbelievable. Like, the biggest opposition to their Arizona project, they said last year, was their own shareholders. Look, we don't want to get involved in that, but where are you going to get the copper? I can't imagine.
Well, I saw there was a picture on Twitter just the other day where someone was showing the interior of the cable that goes from the offshore wind turbine to onshore to bring the electricity onshore.
Yeah.
It's something like 50 kilograms of copper per meter. 50 kilograms of copper per meter for those power cables to bring the and it's like, are you kidding me?
I bet you if we invented copper coin and said that we're going to disrupt the process of making copper, people would buy that. But you have a royalty on all the copper. I mean, look, when you fly into Salt Lake City, you fly over Bingham Canyon Mine. Solomon Guggenheim developed that mine. Guggenheim Museum, all these things. Okay, that's 100 years ago. So what was the price of copper 100 years ago? In the pennies. Okay,
probably pennies. Yeah.
Pennies a pound. Imagine if you had 1% of all the production that came out for 100 years, and the price went from pennies to $4.50, and it's going to go much higher. What would that be worth? What would that be worth? And so in my book, that's what I'm talking about, is I'm explaining how this works. It's simple. It's easy to understand. It's you sleep like a baby at night because you say, I don't know what these guys are going to do week to week. I don't know. I'm playing Dizzy Bat. Remember Dizzy Bat? You're spinning around and you come up and you don't know where. That's what it's like. Okay. And I'm not going to hop from AMC Theater to GameStop to, Sushi Coin. And then I'm not going to do it, man. I'm generating taxable gains. I don't know what's coming next. I have anxiety. I can't do it. And I'm missing the big picture entirely, right? But I'll take 100 years. I'll take 100 years of 1%. I'll take that.
Yeah.
Ivan's doing the Shiba coin royalty. So
there you go.
That's his
thing.
Or
1% of Shiba.
Was it Cum Rocket?
Can't remember, because there's 9,000 on CoinGecko. There's something like 9,000 coins. Which one do you choose? You guys, you got to read the description of these coins. It's inspired by financial freedom. What does that even mean? I mean, how do you have something? It's like if you buy a steak, but you don't get a steak. It's inspired by.
It's inspired by inspired by the cows.
It's right. I mean, the empty plate, but we say, well, we we like the idea of steak.
EB, thanks for coming on with our audience. Do you have any sort of any final thoughts for how to, here we are in December, end of 2021. What should people be thinking about for the next few weeks, just when they look at all the craziness this year?
Well, I'll share with you a little secret that I've been doing this for a long time. And one of the things that I do is I realize that the average wealth manager says, hey, you should sell your losers at the end of the year. And so you can offset your taxes. You might have heard this advice before. They always tell you this. And so I know that's coming. And so with my stocks, I'm right now behind me. This is a Bloomberg terminal. I'm watching, and I can see the weakness of people selling to take a loss and doing something else with the money. So it's an abnormal amount of weakness. And this is a time of year where I do the opposite. So I watch when things get weak, and I'm in and taking positions that as soon as the tax loss selling is done, it's almost like a beach ball underwater. Woof, it comes flying back up with extreme force. And so this is a time of year where if you have a company where the fundamentals are sound. I mean, for me, it's Metallo Royalty, MTA in the US. It's Nova Royalty, NOVR in Canada and a VRF in the US. And I'm obviously watching like a hawk because I'm a major shareholder and I'm on the board, but you might have a company too that you know very well, and you can see this unusual selling. And so this is a fabulous trade to start the year. So you want to be hungry when people are selling for tax reasons. I mean, this is bad advice oftentimes that they're getting, and then you can take advantage of that. And so as we go into the holiday season, I want people to think about that, because I've done this for 20 years and it's something that each year I can watch happening real time in the market. It's actually, it's quite fun to do the opposite of what all your peers are doing.
On that note, sir, this has been wildly entertaining. Thank you very much for coming on to talk with our audience. And we'd love to have you back in the next 2 or 3 months. I know your schedule's busy, but we'd love to talk to you again in January or February as the market develops next year.
Well, will be interesting to see what the fireworks are. I mean, it's the first year I remember where the tax code hasn't been set for the new. So you have less than 4 weeks to go, and you don't know what your taxes will be. So I mean, welcome to the land of the free. Yeah.
Well, yeah, we got the crazy debt ceiling. That's still up in the air. Here it is, December.
We'll talk about it next year. We'll see. We'll see if everybody can get confused enough, and then I'll come back and straighten everybody up.
All right, sounds good. Thank you, sir.
Thanks so much.